Hello and welcome. You are watching Property Hotline with me, Kavita Krishnan, on Magicbricks Now. We'll help you with answers to all your questions related to home finance. Today in the studio with me is Harshil Mehta. Harshil is the CEO of DHFL. Harshil, welcome to the show. Let's get started with this question that's coming from Mohan on email. Now, Mohan wants to buy a flat in Thane East. His budget is 70 lakh rupees. His monthly income, he says, is 65,000 rupees. Now, he wants to know which is the best bank to avail a loan from. He's ready to make a payment of 10 lakh rupees. He wants to know how to go ahead.
Well, Mohan, first thing you need to do, you need to break this into two parts. The first thing you need to understand is how much is your eligibility for taking the loan. And basis what you have just mentioned here, that your salary is about 65,000 rupees. So on that basis, when we look at the eligibility, typically eligibility is always around, 6 times your annual salary. So basis that, it comes to close to anywhere in the range of, 45, 46 lakh rupees. Now, on that basis, and if you are looking at a property which is worth 70 lakh rupees, then, you have to understand that the balance is something which is going to come as an equity from your end. So the first step in a home buying process, especially when you are going to go for a loan, the first thing you need to ascertain is what is going to be your eligibility. Once you know your eligibility, then you can look at the budget and see how much is going to be your equity, which will help you, firm up your decision better on that basis.
Right. And this equity ideally should be around 20%, right?
See, yes.
Banks typically will not lend you more than 80% of the value of the house. So you need to accordingly calculate that basis, basis the budget and basis the cost of the house that you actually, decide to buy. The other question that he asks, which bank should I choose? Now, of course, that is a personal decision, one that he needs to take himself. And I know that's what you'll say, Harshil. But could you give him some pointers on how to make the right choice?
Sure, Kavita. See, Babu, as far as taking the decision is concerned, sorry, Mohan, is with respect to, what are the processing fees? What is the interest rate? Nowadays, at least, the foreclosure, if you want to prepay the loans earlier, now there are no foreclosure charges. Earlier, there used to be. Apart from that, how quickly the institution is able to process your loans. For example, if you have identified a property which has already been approved by that institution, then your disbursement process becomes a lot easier, because then they do not really have to do a legal and a technical due diligence on that. So these are some of the basic things you may want to check as to with respect to your selection of a bank or a housing finance companies.
Also, how important is it to, have a relationship with the bank from which you are taking a loan? Now, if, say, I'm a salaried employee and my salary comes in a particular bank account, does it make sense then for me to actually go and take a home loan from that bank? Will it be easier?
See, usually what happens in such a situation is, that particular bank basis your salary account will normally try to give you a pre-approved loan, and by far that is working well. That is one aspect, but usually also there is another aspect is, you may have a salary account in a bank, but your main bank account may be with some other bank. So it's again, clearly a question of, where you are more comfortable with respect to your requirements, and not necessarily linked to the relationship where you have your banking account. Because, the products are different. Here you are looking at a home loan product where you have a certain need, and who fulfills the need to your requirement is something which one should look at.
Right, and Mohan, you would do well to remember one thing, that right now there is a lot of competition in the home loan market among banks, among HFCs, for your custom. You need to remember that. In fact, you are the one the customer, the borrower is the one who's technically calling the shots at this point in the market. I think, Harshil, you can back me up on that. And of course, at the end of the day, the two main things that you need to keep in mind when you are looking to choose a bank or an HFC is the processing fees that you will be asked to pay and the interest rate that you are being given. So otherwise, it's a huge market out there. You should go out and shop for the best deal at this point in time. A question from Babu now that's come in on email. He wants to know if there is an option to apply for another home loan if he has already availed one. If so, he wants to know what is the procedure. And a follow-on question, Harshil, if I've already availed a home loan and I've paid it off and I've been a borrower who's disciplined, I've been paying off on time, will it be easier for me to get that second home loan?
Kavita, I'll answer your second part first. The long and short of it is yes, because you have already established a track record. And see, usually the home loans, are not short-term loans. They are not taken for a period of, let's say, 12 months or 24 months or 36 months, which typically you would see in case of a personal loan or a two-wheeler loan. In case of a home loan, the loans are typically taken anywhere around in the range of 15 years. So even if a foreclosure or a prepayment of the loan happens, it is anywhere around, in our experience, around anywhere between 7 to 9 years. And 7 to 9 years of a clear track record gives a very strong indication of a credit worthiness. So, yes, if you have a very clear track record of one of the loans, home loans taken earlier, it definitely adds. Now, Babu, coming to the specific question that you already have one loan running and you want to apply for another loan, absolutely you can apply for another loan. You have to keep in mind that the second loan eligibility will be worked out on the basis of your income minus the existing obligations which you may have currently going on. And then it is up to an individual institution on their underwriting standards. But yes, the answer to that is yes, you can apply for a second home loan even if you have one home loan which is running.
And before we move on, one more question. We know that when companies, when corporates, big companies come to you for a loan, and they already have a working relationship with you, they have availed other loans earlier, and there is a certain credit rating within which they are working. You do offer them a rate, an interest rate basis you assess the risk in lending to that particular company, and you give them an interest rate. Now, there is a different rate. Every company gets a different rate of interest. For a person who's already an existing borrower, somebody who's taken a loan, who's paid off that loan and approaches the same bank again for another home loan, say the income has gone up and all of that, can that person get a better rate of interest on their home loan?
Absolutely yes. Because again, this interest rates is always also priced as on the basis of the risk, and this is what the risk-based pricing is all about, and it works, I would say, pretty much on the same lines as you would see on a corporate, a AAA rated company and a AA rated or a triple B rated company. While it is not exactly on those lines, but yes, the examples which I just talked about, that if you have a very clear track record, established credit, your salary has gone up, your income levels have gone up, and you have a lesser obligations, all this indicates towards lower risk, and hence you get a better pricing.
And how much of a lesser rate of interest can I get vis-a-vis the current rate of interest that a bank is offering?
Yes. See, the current rates, which most of us see in advertisements and which is getting, published, is the lowest possible rate. One cannot go below those rates. And those rates are typically those rates given to those credit which meet all those credit underwriting criteria. And one, if they fulfill those criteria, can definitely get those lowest rates.
Right. So there you go. You can actually not just, if you're an existing borrower, not only can you take another home loan, you can also negotiate for a better rate of interest. That's something that you need to keep in mind when you go shopping for that home loan. Question from Dheeraj now. Dheeraj says that he's working abroad. He wants to know if there are options to avail home loans from banks in India. Now he wants to buy a property in Pune which is valued at 1.3 crore.
Dheeraj, as an NRI, if you are based abroad, you can definitely apply for a home loan. Most of the banks and housing finance company like ours do offer home loans to NRIs, and you can in fact go and check on the website as well, and you will find the process for applying home loans for NRIs. And this is usually for salaried NRIs who are abroad, and process is pretty much the same except for the fact that in case of an NRI, the income is in a currency of that particular country, which anyway from an underwriting perspective, those are being processed. But yes, as an NRI, you can always apply for a home loan for a property in India.
Right, so you can apply for a home loan for a property in India, but tell us this, Harshil, does Dheeraj have to come down to India to actually complete that entire loan process, or can he do it from wherever he's settled, whichever country he settles in?
Yeah, Kavita, it's not necessary for Dheeraj or anybody who applies from abroad to come down to India. As a matter of fact, what one would only look at is if you have a local contact, and ideally you would want to give a local power of attorney. Because in a situation, if you are not able to travel to India to do the registration of the property, then you would need to give that power of attorney to somebody to go and register that property. So you do not necessarily really have to come down to India for applying for this loan. But yes, in certain cases, you would need to have somebody local to do the paperwork on your behalf, because see, you need to sign the loan agreements, all those things still needs to be done. So you need to have that
digital
local.
signatures don't work. If I'm doing the whole thing online, will banks accept digital signatures on the home loan
Very
documents?
good question. See, at this point of time, more than the digital signature is also the fact that, for the property registration, you still need to come,
Right.
and for that, the digital signatures are still not, fully operational. So you will need somebody to do that aspect. But otherwise, everything else can be done online, and can move forward on that basis.
And what about the rate of interest? Is there a difference between the rate of interest that you charge residents vis-a-vis non-residents, or is it the same?
No, it's the same. The only thing in that is, when you make the repayments, typically in case of repayments, those necessarily need to be from an NRE, NRO accounts, which in any case in an NRI, when they have a bank account, they would usually have an NRE, NRO account. So that EMI needs to be from that account.
So there is no separate documentation that they have to provide the bank or the HFC when they apply for a loan? Is there anything extra that an NRI needs to give?
No, they don't need to give anything extra. The documents would be the standard, but it differs from a country to country. See, for example, we have Form 16. Now, Form 16 is a very India-specific thing. Now, in case of other countries, there will not be a Form 16, but what you will have an income tax return. So to that extent, from an underwriting perspective, those companies are well equipped when we process loans of NRIs. We know that if an NRI is based out of US, what are the documents you are going to ask for? If it is UK, what are the documents you are going to ask for, and so on and so forth. So, and predominantly for salaried, it is around salary slip, it is around appointment letter, it is around bank statements, and your normal KYC, which you would anyway do it.
Right. Also, one last question. Since you are a banker yourself, tell us this, keeping exchange rates in mind, keeping interest rates in mind. Now, we know that interest rates in India are far, far higher than what it is in many other countries. Keeping that in mind, does it make sense to take a home loan in India when you could get something at a much lesser rate in the country where you're currently posted in or living?
See, the only thing, Kavita, in that is whether those country will give you a loan to buy a property which is based in India, you know, and that also is subject to the local laws and regulations in those country. At the same time, from India perspective, one also needs to check the local compliances and laws, whether, you know, the property can be bought, you know, with the funds coming in from abroad.
Right. So you need to take all that into consideration. So the easier way, of course, is to just apply for a home loan in India. And like Harshil just pointed out to you, the rates of interest stay the same. The documentation largely stays the same. There's just a matter of, you know, one or two papers that you will need to furnish to prove your income and your quantum of income and your source of income, of course. Moving on, we have a query from Amartya that's come in through email. Now, Amartya says that he's taken a loan of 17.5 lakh rupees. His take-home salary is 60,000 rupees. He's planning on buying an under-construction property which he can move into by 2018. Now, Amartya wants to know if he should sell his flat to invest in that under-construction property so that he can pay slab-wise. Now, what he is not telling us is whether he lives in that flat which he plans to sell.
True. Amartya, you know, again, the first thing is, you know, basis the income which you have, you need to arrive at what would be the approximate eligibility which you will have. Now, basis what you have just mentioned, you know, your eligibility on a 60,000 rupees monthly income works out again close to anywhere in the range of 42 lakh rupees. Now, using that 42 lakh rupees as the eligibility, one is if you decide to foreclose the earlier loan, sell the flat and pay off that 17.5, then the balance is something which comes towards identification of your property. Yes, you can go in for an under construction property. If you are looking to move in 2018, which means you are looking at close to just about a year, you know, the calendar year of 2017, then the stage of construction of that property, you need to keep in mind, cannot be at the plinth level. It has to be at a fairly advanced level, I would say anywhere in the range of 60% where the stage of construction should be complete, so that you are able to move in 2018. So you need to keep this in mind. And yes, when you buy a property which is under construction, your disbursements or the payments will be as per the stage of construction. But it depends at what stage you are entering. If you are entering and buying a property at a stage where it is 60% complete, then you have to understand that you will have to make the payment which is equivalent of that 60% completion. And then the balance would be in the form of as per the stage of construction.
Right. Also, Harshil, what bothers me over here is, I mean, Amartya has not made it very clear, but I'm just assuming, assuming that he lives in the flat that he plans to sell, and that he plans to buy an under construction property so that he can make the slab-wise payments. How financially prudent is that? Because if he's going to sell that flat and go on rent, because you have to live somewhere. So there is a rent that is going out, there is an EMI that you're paying, and God forbid that project gets delayed, which is what we're seeing in a lot of cases across the board. How financially prudent would you say is that?
No, absolutely right. You know, that is something very, very clearly Amartya has to see, because see, unless and until he's really, you know, making a killing on the sale of his property, you know, and he can withstand the rentals in the interim, because, you know, if it is, because on the face of it, it looks very clearly the entire 2017 is going to be under construction, which means that he has to keep in mind rentals for those 12 months, 14 months before he moves in, and the returns he gets on the sale of the existing property, and then to a certain extent also building that buffer that if the project gets delayed on any account, sometimes on account at the builder level or on account of situation which is beyond anybody's control. But you need to keep those buffers with you before you take a final decision on that.
Right. And you also, of course, need to be prepared for all the taxes that you need to pay if you are buying under construction property. That goes without saying. There's service tax that you have to pay, there's VAT, and of course TDS. And remember, you'll have to pay this on every installment that you are making to the developer. So there's a whole cost benefit calculation that you actually need to sit down and do, Amartya, before you go ahead and take this step. The reason we're telling you this is because you're already sitting on a property and you are looking to buy into an under construction property. So that's something that you really need to think through and then decide. We have Amog now, who's written in through email. He says that he's planning to buy property in Bengaluru. He does not know whether to buy an apartment or a plot and then construct the house. So if he wants to own a 3 BHK apartment somewhere on Hosur Road, Amog wants to know the finance options that are available. Also, he wants to know whether he'll get finance from banks if he wants to buy plots. So plotted development or flat, will banks and home finance companies give him money for both?
Amog, as far as buying a house or buying a plot and doing a construction is concerned, I think that decision lies purely with you and your family because each of those has its own pros and cons, and also to that extent what your budget is, because usually buying a plot and doing your own construction tends to be more expensive than the other. Now between the two, whether it is buying the 3 BHK flat or whether you want to buy a plot and do your own self-construction in Bengaluru, Hosur Road, both the situations you can avail of a loan. Banks and housing finance companies do provide loans for plotted developments. They do provide loans for just plain plot. And then if you want to do a construction on that, they do provide loan for construction also. There are combo loans which are also available, which is called as composite loans, plot loan and construction loan. Because in a situation you buy a plot and then you say you would like to wait for a while before you do the construction, that all is possible. So both for a flat and for doing your construction, buying a plot, loans are available from housing finance companies and from banks.
Right. Also tell us this, you spoke about the combo loan. Now, what about the rates of interest on both these loans? Do they differ? Secondly, if you take a combo loan, what about the tax exemption that you get on home loans? Do those apply to such loans as well?
Yes. See, as far as the interest rate is concerned, the interest rates remain the same, as home loans. If you buy only a plot loan, then you have to remember one thing, that you have a time limit. You have a time limit of 2-3 years, within which you have to commence construction and finish it, failing which then the bank or a housing finance company reserves the right to increase your interest rate, because then it is no longer considered a home loan, because you have not done a construction on that and you have not moved in. But as long as you start construction and finish it within the time frame, then it continues to be classified as home loan. You continue to get the income tax benefits on that loan itself.
Okay, so that's how the tax benefits pan out on those loans. Question from Dhiman now. He says he's taken a home loan of 3 crore rupees from Bajaj Finance at 10.57% interest about 2 years back. Now he has taken possession of his flat 4 months ago. With rate cuts happening, other banks are now offering him a 9.2% interest rate. If he switches over his home loan to another bank, will he have to pay foreclosure charges?
Dhiman, the answer is very clear on that. Firstly, you can easily transfer your loans, and if your loan is done on the basis of your own income, and a company, whether it is your own company, is not an applicant, then you will not have to pay any foreclosure charges. But before moving on to other bank or an institution, one thing I would definitely say is, talk to your bankers. First go and talk to them and say, hey, look, because usually, nobody would like to lose a good customer. and they would definitely like to retain that. And there are institutions who have a very strong customer retention policies. And you also need to remember that in the initial years of your loan, the higher component of your EMI goes towards servicing the loan, which is towards your interest payment. And hence, in the initial years, it makes a lot of sense to keep on renegotiating your rates. Though as a banker, it affects us, but in the interest of a customer, it definitely helps, because that savings goes directly to your interest, and hence larger amount gets apportioned to your loan amount.
So then those are great words to live by. If you've taken a home loan in the initial years of your home loan, makes sense to negotiate your interest rate, which is why we also keep saying that don't just take the home loan, go and sit home happy that the money is going from your bank via ECS. You need to remember that you have to be very proactive as far as your home loan is concerned, because chances are that unless you go and ask your banker for a better deal, the better deal is not going to come knocking at your door. You need to go and ask for that. And even that's exactly what you need to do. Ask your banker first and then look to switch over. You'll actually probably change, you'll save a lot in terms of processing fees, at least. If foreclosure charges, of course, you do not need to pay. Also, before we move on, this is a question that we are getting a lot of these days, Harshil. Especially with, a couple of banks have already announced interest rate cuts. We've seen that happen of late, that is before the credit policy at least. What would you advise people right now if they are looking to switch their home loans? What kind of a differential should they be really looking at? When does it really make sense for you to switch your home loan?
See, there are two areas you need to look at, and it's always not necessarily the interest rate, because many times it is also a question of the tenure of the loan. For example, you may be at a tenure which is just about 10 years or 12 years, and there is an EMI which is being paid. Your focus on that is lowering of an EMI, and if you are getting an offer which gives you a higher tenure loan, but it may be, let's say, 15, 20, 25 basis more, but in essence, if your monthly EMI is coming down and that suits your requirement, then you should go for it. Okay. However, if you were to just do a plain apples to apple comparison and moving from one, unless and until you don't see a benefit which exceeds more than 100 basis points in the long run, it really does not make tremendous amount of sense for two reasons. One is the fact that you still have to go about doing all the paperwork, because you still have to go and apply for it. And number two, there could also be, processing fees which come into the picture.
So you should look for at least a 1% differential in interest rates. Only then does it really make sense for you to go through all of that paperwork to switch your home loan from one bank or one home finance company to another. With that, we come to an end of this episode of Property Hotline. Harshil, thank you very much for coming in and answering all those questions. And we will, of course, help you with answers to all your questions related to real estate, whether it's buying, selling, investing, legal issues, home finance, or taxes. Call, write in, or personally tweet to me. I'll get you your answers. Thank you very much for watching Magicbricks Now.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/magicbricksnow. And don't forget to click the like button. You can also follow us on Twitter at Magicbricks Now. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/magicbricksnow.